Good morning, guys. How is it going today? So today is Saturday, January 13th, and today we're going to take a look at Lisk. I haven't ever done an analysis on Lisk. I can't say I know too much about it, though the charts look very, very promising. But before we can proceed, guys, I have a small blog version of this on Steemit as well, and I'd appreciate if you guys upvoted it, if you guys enjoyed the material, and if it has helped you, or do you think it will help you down the road. So I really do appreciate that. And be sure to like, subscribe, and share, and the whole 9 yards, etc., etc. I also have a Twitter as well. I post a bunch of goodies on there. Tons of little goodies. And sometimes they can be fairly good quote-unquote signals. I don't like to call it that, but a lot of the times you might get warning, and a lot of people have made some pretty good profit off of it, I suppose, by identifying the tops or the bottoms, etc., and things like that. And yeah, and I also have a cryptocurrency piggy bank for Luna. She's the dog you guys hear yelling and howling in some videos. Welcome to donate if you want to, but don't ever feel obligated. So let's take a look at Lisk, guys. Before we can get started with anything, it is important to understand theory first, right? How do you understand, how do you do anything if you don't understand, or how do you try to understand anything if you don't understand the theory behind it, first of all, right? So, and this is very scientific as well, and of course it requires an understanding of theory before we can proceed into something. So, we're gonna, first of all, talk about Elliott wave as always. Elliott wave has 5 waves up going like that. And then it has some sort of corrective pattern in here for ABC, for example. It's hard to count the waves as they go up all the time, but we try to use indicators to give us a hand and retracement levels followed by specific rules. So the top is usually indicated by the daily, I would say, or even a weekly for a strong 5-wave impulse up. And then we have an A, B, and a C. C can fall anywhere, but the first thing that we try to do is try to count 5 waves coming down. Because in the A wave coming down here, we usually see a zigzag. And a zigzag comes, don't mind the slope, 3, 4, and 5. That is called a 3, 5, or sorry, 3, 3, and wave 5, or C always has also 5 waves coming down. Don't mind the slope once again, I'm just too lazy to do it properly. Imagine if that was the slope. That would be a huge red line, okay? So then we get like this, an A and a B and a C, like that, right? Now, it's a crucial thing here to make note of. Do you guys know this pattern right here called the head and shoulder pattern? This is just a little theory on the side. Do you guys know this pattern? Yeah, you guys know this pattern. You guys know this pattern. I know you guys know this pattern. Head and shoulders, right? This is a head and shoulders pattern. How do you guys think it's derived? It is derived from wave 2 to 4 for the left shoulder, and the head is 4, 5, and A. And then the right shoulder is derived with A and B right here, and C, okay? And part of C. Now, this is what they call the neckline, right? You guys always hear of this neckline. Is it going to break this neckline, right? And it can come in many different shapes and many different slopes. And the reason they say that is because of this C wave right here. This is from a very theoretical perspective, okay? And I hope that you guys have enjoyed these types of analysis, because there's nothing like it on YouTube or the internet. This is called Asian level charting, okay, guys? I'm Asian. I have a little fill. I'm really bad at driving, but I'm good at mathematics as well, okay, guys? I fit all the criteria. Yeah! I'm just kidding, guys. Lil Phil will disprove you any day, okay? Don't make me, please. Do you guys remember the day where I thought that I would never hit 10K subscribers on YouTube and on Twitter? And I'm like, okay, I'm gonna send a picture of me in my underwear if I hit 10K for both. And a month later, here we are, guys. A month later, here we are. Okay, back to theory. They say this because they don't know, right? Oh, by the way, this is called a 3, a 5, 3, and C could be very short, okay? This is called a neckline right here because they don't know where C is going to end. Sometimes C ends up right here, right? Sometimes C ends up right here. But I was going to also make a note that when B is formed there at the top, right, it makes a slope like that. You know, if it's definitely bullish enough, it might not even make a slope like that. It might make a slope like that, right? For the point B. And then all of a sudden we get a higher right shoulder. I'm gonna remove this in here. We get a right high, you know, like that, like a double top, right? For now. But we don't know where C is, right? Now this is the question. Where is C going to end? But let's just say it makes a pattern like this because it's been the flavor of the month, right? And then our slope would be something like that, right? But now, when it hits the point B there, a C, if it ended up being like that, right? Or it could hit here first of all. And then if that does end up hitting and bounces off of there, and this we can end up expecting something else. We can end up expecting an A, B, C, D, E type of pattern to possibly form, right? If it bounces off of C here, then we would expect one more touch up here, and then another touch off of there, and then a breakout finally. So that is the one variation. Now the other variation, of course, is, you know, just an A, B, C, right? Or we just have like a double bottom, and then a double bottom, as you guys might have seen before, where it touches there. And then if it fails this right here, the neckline, right? The neckline, that's where people short it because they expect it to go to the next lower level around over here, okay? And then all of a sudden this slope changes, right? This slope doesn't become valid anymore. And then we end up becoming a double bottom like this right here, right? And then the head and shoulder is now discounted. And now we have an A, B, C. And then when it becomes a C touchdown here, and it does actually bounce, right? We can end up getting an A, B, C, D, E, symmetric triangle like that, okay? A symmetric triangle like that. And then we might even expect it to break down or up. It's possible to break up, but there's more pressure to go down, okay? So these are the kind of things that must be understood in a pattern, in a chart, before we can understand the characteristics of it, all right? Right here. First of all, we go to a daily chart when we start looking at any chart, and we draw the most visible things we see with trend lines. That is such a visible trend line. And now this one that we're about to draw next is subjective, okay? Are we going to draw it like that? Are we going to draw it like an expanding diagonal? Are we going to draw a channel like this from wick to wick? Or sorry, body to body? How does that look? That looks good on the daily, but how does it look on the other charts? On the other ones? On the 4 hour? No, that doesn't really look that good, right guys? It doesn't look that good on a daily. There's too much price action in that area. So what if we just kind of drew it like that a little bit right now? How does that look? Looks okay, right? That looks like a pretty good channel. Absolutely, a pretty decent channel. It even makes a perfect contact over here. So because it's making all these contacts like this, we might even assume 5 touches already. Okay. So now that we've done that, I'm just flattening it out and locking it. Give me a second here. Okay. Now that we've done that, we can assume that there's a wave 1 somewhere that has happened already, because there must have been an uptrend. This tiny little bump there could have been wave 1. This is 2 right here, and this is 3, or sorry, right here, in here. It's hard to see it, because we're so zoomed out far, but this tiny little one did move up like a ridiculous amount in price action. This is not factored in because the more, it's moved up even more since then, right? It didn't move up here. That one moved up like 200–300% as well. So it might be valid to count that over there. Now it looks great here, but of course when we zoom out on a big picture, right? On a big picture, it's hard to see it. But now, would it be valid to say that these two on a bigger time frame would be a wick, and then this would be a wave 2 coming down here, and this would be wave 5 going up right there? For example, like this. 1, 2, 3, 4, and the 5 range, and a big correction. And these, we count them as an overlapping candle. Okay, let me explain to you guys the mechanics of this, of a wick poking through for Elliott wave. First of all, we have to understand the mechanics of a wick. If we have, for example, a green candle and a red candle like this next to each other, on a much larger time frame, because how do I delete this? There we go. So on a time frame like this, because we're going in this general direction of it going up and then down, right? If it was the other way around, for example, this way, we're going down first because we're selling off and then we're buying back up. But in this case, it's a green and a red followed by each other. And because it's a green and a red wick followed by each other, those actually equal just where they originally meet. So where it began and where it originally ended. And that's the only place that actually shows as a body. So this is an equal sign, okay? So this would actually end up equaling just a really long wick to the top over there and just a body, because the body only shows where it begins and where it ends, and where it overlaps as it goes from up to down, right? As it goes from up to down, it just shows as a wick there. But now let's say it was the other way around, where it was a red to green, okay? Because we're now going the other way around, from bottom to top right here like that, so where they originally overlapped, so where it began and where it ended, those are the places where you would see just a wick, or sorry, just a body. So the body now would be up like that. So this is why it is generally acceptable to draw Elliott wave like that. When on a higher time frame, it will just count as a wick, right? If you read a lot of Elliott wave books, you'll also see that corollary as a corollary. Is that how you say corollary? Corollary? I think it's corollary. It's like a side consequence that and a rule that lets you overlap like that. So yes, this one over here, we do see activity overlapping it, right? Definitely we do right here. But on a higher time frame, it would be just as a wick. So I would absolutely count all of this over here as wave 1. Right there, right? All of this right here. Wave 1, and that's 3, 4, and this is 5. 1, 2, 3, 4, 1, 2, 3, 4. Yeah. So this makes an ending 5th wave diagonal right here. So now, this is in June. 1, around there. 2, 3, 4, and 5, where the 5th wave makes an ending 5th wave diagonal like that. 2, 3, around this region, 4, 5. You can kind of see the diagonal forming if we just look at the wicks, right? Kind of in that region right there. If you look on a different time frame, it would probably show very well. But anyways, that's really far back. I just wanted to confirm with you guys that that's one wave, first of all. That is all that really matters right now, okay? That is wave 1. Now we need to confirm things like this with theory to know what to expect next. I mean, for all we know, this could be the 5th wave, right? I mean, if this was wave 1 right there that I drew, and this is wave 2, then or sorry, 2 around here, or this is 2, and this is 3, we can now confirm that we're on a wave 4 correction. Now, if we don't do what I've just done, and we don't test all these waves and see different variations of wave counts, then we get set in what we think fits our criteria the best to make sense. And then that's where you get into trouble, because then you're drawing something to connect the dots to fit your ideal position that you're in with the coin. So from an unbiased perspective, you have to have many different types of variations of wave counts as well, right? And you also have to confirm them and make sure that they fit the criteria and they're within the rules that are acceptable for Elliott wave. So based on what I've done there, it's hard to also disagree that that's the right wave count, right? I mean, just take a look at it again, and based on the theory that I'm using to debate about why, for example, this one is 1, right? 2, 3, 4, 5, like that. So why? So now I'm gonna say that this is wave 1. Oh, sorry, not wave 1 there. Wave 1 right here. We've counted literally every single wave for Lisk, right? There you go, right there. Okay, we're going to do a quick Elliott wave count just to make sure that if this is wave 1 and this is wave 2, that there's 5 in here right now. Okay. This one might be confusing, but I will justify all of it. I've thought about it. Actually, it would be probably something like that. 4 is around that region, and we get 5. That does make sense. And this one, people might mistaken it for a different point, but I'll go over what it is actually. I don't want to count every single one, but there's definitely 5 in each one here. This one might be starting from down there. There's 1, 2, 3, 4, and 5. This one makes a zigzag pattern. Let's see how many bottoms we can find. We can find 1 bottom, or how many lines we can draw. 1, 2, 3, 4, 5, pretty much 6, 7 before a breakout. What that means, it's a double Elliott wave combo. So in hindsight, yes, it's easy to identify. It makes a double Elliott wave zigzag. So that's the 1 zigzag there. And it makes a double Elliott wave combo from here. It attempts to break out here, but it doesn't quite break out, right? Doesn't quite break out. And then it ends up getting a bottom around over here. Right there before it breaks out. And here, what it does is it does another Elliott wave, not Elliott wave, sorry, but an ABC like that, in very mild fashion with a double bottom ABC. It didn't really form any patterns after that, it just broke out. So with the 7 lines can also confirm a double Elliott wave combo. Sometimes complicated structures can form over time. So upon the breakout here, we can easily just call this one 1, 2, 3, 4, 5 as well. One area 2, right? This one's very, very prominent. 3, 4, 5. And then here, it formed, I don't want to zoom in too much, but it formed a 5-wave zigzag down. We can actually see it pretty well here. Just based on the highs and the lows, we can find 5 candles, I'm sure. This one spiked up a lot, but by wick, generally accepted for leading first wave diagonal. It's a long time staying in the channel type. On a low time frame, you'd be able to see this guy really clearly. On a high time frame, there's only a few amount of candles, right? But on a low time frame, you'll see the channel beautifully. So we get 5 waves there, which would imply we'd probably get some sort of ABC wave going up here for a B corrective pattern. Something like that against the trend, right? The B just happened to be really, really high, right? But as soon as it started to level off there, it formed a resistance around like that, right? And if we kept drawing it, even from it's like wick to wick or something like that, just so we can get the majority of the where it's having resistance there. So it met up with B there, right? And because it had a lot of resistance there, we could have assumed it could be another double Elliott wave combo, but most likely not. It doesn't repeat itself often, 2 of them in wave like 2 and 4. It usually alternates, you know, one of them could be one could be the other, but usually not both. So that formed that, but in hindsight, it's easy to identify that this is A here, this is your B here, this is your C here, this is your D there, and that's your E there. And it made a wedge for the fourth corrective wave, like that. So that's the fourth corrective wave wedge before a breakout, right? The breakout happens officially right here. Here's still all part of consolidation. If I drew better, it's all part of the bottom there where it touched out. Yeah. I mean, actually, nah, we're not, it doesn't make sense that I forgot that I thought of this earlier as well. That it makes sense to call this one here, like pretty much where wave 1 is, and it doesn't get a lower low. This is wave 3 here. Maybe wave 4 is somewhere here. And wave 5 is up there. Can we count 5 subwaves in here? Yeah, I guess we can. We can call this in just A, B, C, where it ends right here. Wave 2 had the complicated one. I can see it already, like an A, B, C, D, E. A low time frame would be pretty good. Something like this maybe, right? So the reason we know that this whole thing is not just part of a small subwave is because it's retracing so much, right? So we're just trying to count it down, honestly, on a low time frame. It's not really necessary, but we're just doing it for fun. That could be wave 1, that could be wave 2, this could be wave 3. It does not retrace really to the territory of wave 4, and a really extended 5th wave. But either way, guys, we count 5 waves right now. And after we count 5 waves, it's usually correction time. But now, what we can assume with Lisk is this. It's going to be consolidating for a while, because we now have officially accepted what we think is a good wave count, right? So it's a good wave count, and that's 3 there. 4 will be, you know, somewhere in a range, and then 5 will go up. So we still have a ways to go, quite a bit of ways to go. If we use fib extensions, oh, sorry, I drew this wrong. Oh, no, that's right. I include the small part there. We drew our fib extension, and just see what ratio that wave 3 got. You know, it got a monstrous one, right? Yeah, it got a monstrous one. You know, some people said to me before, well, what if you included this one here as your wave 1? Okay. Or one friend said this to me, actually. And then this would be your wave 1, and that's 2, and that's 3. But then I disproved him by saying this. That if this was your wave 1 like that, right? Like, is that possible? Because wave 4, right? Wave 4, where do you call this? This wave 3? If you do this, yes, you got a 1-to-1 ratio, right? But now you're including a huge, massive wick that overlooks into this massive territory, and wave 3s always come in a zigzag, right? So it doesn't make sense to me to have this kind of overlapping this much for a third impulse wave up at all. So it makes more sense to do the wave counting like this on a daily, where there's going to be, this is your wave 1 right here, right? Sorry, like that. One, two, three, 4, 5, and that was the A, B, C, D, E corrective pattern. So just using a typical, like, assuming that wave 1 was small, wave 3 was really big, and just extensions of retracing, say, a healthy amount, right? Like, we'll use a worst case scenario and a best case scenario. assuming that the wave 1, this wave 3 does hold true, and it is indeed an impulse wave up, right? We'll assume different layers of possibilities. It's possible to go back down to $7. Not likely at all. Where's a very likely Fibonacci zone that has lots of price action, that has lots of support or resistance that has formed before? And the answer is, well, first of all, this region right here. Like this region is between 2280 and 2748. And then the second region is the lower end over here, right? Is the lower end over here. So that was about 2260, we'll say, you know, to 2733, whatever, close enough. This is about 1831 to 2251, because, right, this is kind of like one region right here of support, like a higher region. This is kind of like a lower region, right? So these things are important to consider, and I'll explain why. So right now on a daily, what we see is a fairly good move up. We see a baseline support being established here first, okay? We see a baseline support being established there. Most likely a channel was established as well. There we go. A channel was established as well like that. Right? Not bad. So, you know, I want to argue the other one as well. Let's say that we did accept this right here as our wave 1 impulse move up from here all the way up to the highest possible point there to the retracement. If it was this one here, the highest point, then the retracement would be right here, the next one. Then what we can say is that wave 3 fails to hit a 1-to-1 ratio, which is not good, right? So wave 3 is often the longest, but never the shortest. So we can't say that this is wave 3. Now, let's say we argued it, and we said that this right here, this top was the end of wave 1, right? And the next lowest point would be wave 2, right here, okay? And then this would be acceptable, yes, okay? That would be acceptable because now wave 3 definitely pierces a 1-to-1 extension of wave 1, okay? But now the issue that we have is this right here. The issue we have is that the first wave retracement, assuming it ended to right there, okay, the lowest point it retraced to is 618, okay, 618. Now the beginning of wave 3, right, wave 3 right here to up there, too many fibs. So I like to make these arguments all the time to see where is it going to actually land. And a lot of times, with enough TA, your accuracy tends to increase over time, right? And now we say to ourselves, if this one we trace 618, and if this was the point of where wave 1 ended right here, right? If not even right there, then the highest tolerance we would accept is about right there for wick only on a daily, okay? On a wick daily. That's kind of a lot of price activity on both sides. So we would have expected a much lower retracement, like a 382 maybe, because it only did a basic 1-to-1 extension about, right? So there's a lot of arguments that are flawed when people are arguing that this is wave 1, that's 2, that's 3, and this is 4 right there, because third would be a much stronger impulse wave, right? So it would make much more sense to consider this small point as a wave 1, that's 3 there, that's 5, and the consolidation, this is all of wave 1 consolidated here, right? And that's wave 3, 4, and 5. Not only that, we confirm it on the daily, right? The daily is starting to downtick, guys. The daily is starting to downtick, right? You just cannot get a higher high on the histogram. It is bearishly diverging. This is really at a high point right now. I know it didn't go lower as well. On the 4 hour, it is definitely going up a tiny bit, But these ones tend to just go up a little bit only and then snap back down on a lower one if it can't get a higher high. Like look at the daily, for example, right? It did it right there. The histogram bearishly diverging. On a 2 hour, right? It can't really get a higher place as well right now. Like it cannot get a higher RSI, and it can't move into the bullish zone. A bullish zone would be considered staying above 60, right? So a bullish zone would be, well, not 60, I guess, it would be between 40 and 85. Like here's a bullish zone between 80-ish, right? 80, 85. And a bearish zone would be considered anywhere really low, under 30 to 60s. And a neutral zone would be like 35 to 65-ish, right? It's now staying in a neutral zone. It hasn't exactly corrected all the way to a bearish zone, right? Like a super bearish zone yet. But I bet you on a low time frame it has. Yes, see? It has much so on a low time frame, right? But it has not yet on a high time frame, and I will explain why, okay? Because it just hasn't had enough time yet to get into a low time frame. Now let me show you what Bitcoin is doing. It's really important for you guys to understand what Bitcoin does, because every other coin, it follows the tune of a Bitcoin, right? So we use Bitcoin as the leader, of course, and what Bitcoin tends to do, other coins will like to follow it in one way or another. So here, first of all, we count 5, I'm not going to count all the Elliott waves, okay? We count 5 waves coming down, and then we count a B going up, and then we count a C, right? And because C fell off right here in not a typical zigzag, this one we automatically assume. And because it leveled off here as well, we got lots of support. We're going to expect a wedge like that. And this one is going to form an A, right? A B, a C, a D, and an E. So that's how these patterns are emerging. Now, if you look at Lisk, I was on Bittrex, that's right. If you look on Lisk right here, right, all that we can see so far is an A, right? And then there's a B somewhere. We don't know how high it's going to go. And then there's going to be a C somewhere, right? But what we do know is that within this B, this is basically 5 waves coming down, okay? 5 is often the shortest, but never the longest, okay? Let's just say that, you know, like around here, wick region barely, we can say this is region 1, 3, right, 4, and 5. Even if this was region 1, it had a really strong, sufficient downward force. Wave 3 is often the longest, but never the shortest. As long as it's longer than wave 5, which it is because wave 5 didn't reach a 1-to-1 extension, we're good to count that as 5 waves coming down. And this one just had a very strong wave, see? This one just had an extremely strong wave coming down because sell-offs happened at the very top. And here, and this is a wave 2 correction, wave 3, wave 4, and wave 5. So that is indeed 5 waves there. We just counted the 5 sub-waves as well in the primary wave. So here, what happens after this is it makes an A, B, C type correction. By Elliott wave, it makes some sort of A, B, C type correction in this fashion. We counted 5 waves coming down here, but it could have, you know, we counted it very quickly as well. So A, B, and C will do something like that. But the first thing we have to acknowledge is that there's a channel going on, right? Draw your trend lines and your supports to the most relevant areas that we see. But I warn you that these channels often get broken because this coin it's no Bitcoin, put it that way, okay guys? It's not meant to break highs all the time. But this coin is on a rampage right now, and we can see a clear channel that's forming depending on how we draw it. I won't be too inaccurate about it. And now we look at this right here, and we say this was wave 1, okay? If this channel holds, okay, well, first of all, we're gonna dissect it. So there's a channel there, and that is A that we called already when we also verified a count. Now what if wave B does is something like this. if that's even a B. You know, and there might even be one more wave coming down here. 1, 2, this could be 3. This could be very well 3, and there could be one more wave coming down. I want to be very clear about that. But the support channel makes it pretty strong right now, okay? So there's a B up there, and in this B, it actually has an A, B, C, like that, in there, okay? So the B likes to make a touch off of here, at least, right? It likes to make a touch off of there. It gets to a point to around C, right there. And then later, it likes to decide whether it wants to stay and consolidate in this channel or not. And how we've asked ourselves is this, okay? If this was the wave 3 length right here, and it retraced to right here, is this possible? And we answered yes, it's possible, because the overall retracement was somewhere between 382 and 0.5 already, which is respectable, right? Which is definitely respectable. It is possible. If it only retraced 236, then we might ask ourselves, hey, well, it might still be bullish. But because it's retracing an entire amount of the entire wave right here, a decent amount and very respectable, we're at A touched here. So yes, right? We definitely can get a truncated C here where it forms something like that. But a lot of people are thrown off, okay? So look at Bitcoin, for example. Look at Bitcoin right here. Okay? People are thrown off by, hey, why did it make another touch? It's because, like I drew, it draws another A, B, C within the distance of A to B. So now we have A, B, C. Doesn't this feel like school to you guys? No, really, it's like school, right? It's all theory, my technical analysis, right, guys? It's all theory. There's no, like, there's none of that crap that you see in other channels where they're like, this is where they're like this. Okay, well, guys, we have a high right here. Okay, if it gets higher than this high right here, you know, then we're probably going to be looking to get new highs. But if it doesn't get a higher high than that one, then we're probably get new low. And then after that, this is a support here because there's a line here and there's a candle there. And if it goes lower than here, then it might go lower than that. But if it doesn't go lower than that, then it might stay higher. I see a lot of channels like that, you know, and it's nothing personal against those channels, right? But I'm just laughing because I'm trying really hard to be different, guys. I don't mean to be making fun of anyone, okay? You guys know I'm not that kind of person. I'm not mean. Who am I kidding? I'm so friggin' mean. I eat dogs for dinner. I love dog, man. Okay, anyways, back to this. So yes, it is definitely possible. So this B going up to C, right? It ends up wedging in here. Now the question is this: when C gets formed, you know, C could be like that, right? C could be like that. It could be, who knows, like that. It could be something like that. If this was like this, it'd be amazing where we get such a strong C, right? We get such a strong ABC that it becomes like a resistance, right? And we end up getting like a wedge, or sort of a symmetric triangle. Not a symmetric triangle. We get an ascending triangle like that. And that would be the most ideal shape in the world, because that's so bullish. And that happens to many, many coins. Do you guys want to see an example of it happening? Let me show you of it happening, okay? This one didn't quite happen like that, but this is one of the most bullish coins. This one wasted absolutely no time correcting at all, right? So this one forms into this type of pattern, okay? As best as I can draw it, like that. And it wedges there, and it wastes no time at all going up there, okay? See what I mean? Actually, this one might even form something like this right here. This would be more acceptable in this range with the wick poking in there. A different time frame, you'll definitely see it a lot better, right? So yeah, that's what I'm talking about, guys. Like, that's an ideal shape that we want to see, because then it becomes like an ascending triangle, which is super bullish, okay? Well, I'm in bitfinex, that's right. Okay, so that would be a cool pattern to see. And then, you know, if it doesn't really get that high of a high, then we end up seeing, it might not even touch this trend line, who knows? But I'm guessing it will make one more touch, guys. I'm sorry to say, but I think it's going to make one more touch, because it's going to make the A, B, C in here like that. And, you know, it might do something like that, okay? Let's say it does do something like that. It makes a C in there. And now this becomes discounted, and we use another theory of A, B, C, D, E, right? Like that. This had the A, B, C in there, if you guys remember, like that, okay? And if it bounces off of here, off of the channel, right, then we're like, yes, it bounced. It's going to make a symmetric triangle. So then if it bounced, once we get confirmation of the uptrend, we go into a position, right? I'm just going to draw it very loose. You guys should be going to your charts yourselves as well. And you guys should 100% be trying to chart when I'm charting. Because you guys need to get the practice down, right? You guys notice everything I'm doing is all theory, right? It's all theory. And I know to a lot of new viewers, it seems like hocus pocus sometimes, but I assure you guys, for the people that have been following me for months now, that you know, some of my calls are wrong, right? But a lot of the calls are right, right? If not like very right, then at least right in some way where some sort of reasonable and rational explanation for what happened, or why, or where we can enter in some rational spots for breakouts, right? So right now I'm trying to plan for rational breakouts. So if it does bounce on C and I get a confirmation, right, that's a possible 18% uptrend. Always look at the price on the right when I talk. And then yeah, then we can expect one more bounce off of D, and then we can get an E if that were to be valid. But if that wasn't valid and this channel does not hold, okay guys, this channel does not hold, and the C doesn't end up being there, for example, it doesn't hold, then we unfortunately go to the next lower level of support, and that would be around this big area right here, okay? And then what we end up forming is a different type of pattern, maybe a C right here, okay, in this buy zone. And then, you know, this ends up being extended, and now the pattern that we are actually probably going to see is maybe something like that. So patterns emerge, right? Patterns start like this. It starts like this kind of possibility, you know, ascending triangle during constellation, and then it starts to go into a symmetric triangle, and then it starts to come down, right, into a descending triangle, and then it might come down into like a wedge, for example, and then it might come down into, or not a wedge, it'll go into a channel first, right, like a channel like that maybe, okay, just using it as an example, like a channel like that. And then if that, you know, sometimes doesn't work, then it might end up getting, if it's very parabolic, right, if it's a very parabolic, you might end up getting like a wedge or something like that as well, that you guys see. So there's a very limited amount of shapes that can happen. So if it does hold support here, then great. For now, we might get a triangle, symmetric one, where we evaluate if it holds or not. And then if it doesn't hold in here, right, then we might even drop down to a lower Fibonacci region, and then it forms a zigzag. So all you guys gotta do for your chart is draw your Fibonacci, right? Go to your chart, draw your Fibonacci from right around 375 to the peak right here, right? And realize that this is a buy zone right here, right here, right here, right here. And also this is a strong channel support that's been developing since the end of the 30th, right? So you guys would expect this B bounce, right, where it goes A, B, wherever to C, like that, somewhere along the buy zone anyways, right in here. So if it hits the channel, you guys, you guys might want to consider, I'm no financial advisor, but if it does bounce, it's a solid support, right? And if it does bounce, like, you'll be able to play a small position, assuming it's a typical zigzag, you know, maybe a 30% gain even. So you guys need to keep an eye if it comes down to the support range again, and we're talking about, like, you know, we're talking about anywhere under, even under, I'm going to say under 20, right now it's at 29.74, right? say anywhere under $28, even, yeah, and under $28, keep an eye on it, okay? Keep an eye on it, under $28. That's all I can say for now. And also the maximum price that we're probably going to see in the short term, using the fib extension of 608 retracement, maximum price, or even 786, is probably like, it might even retrace to $36, right? On the bounce of B. Like, that's optimistic though, but realistically 33 to 36. And then keep watching out for the price for around under $28. That's I'm no financial advisor, but that's what I'm gonna look for. You guys know what I mean? Okay. And now let's get to the big picture, long term. Long term, regardless of how long that consolidation holds, assuming that it retraces to a maximum level and it stays very bullish, right? To say 1965 there, assuming that that's the lowest that it goes for a retracement there and it stays very bullish, and assuming two other things, or one other thing, that this is indeed wave 1, right, where we drew it before, like all the way from down there, you know, somewhere there, like that, whatever. And this is wave 3, and this is wave 4, so to a maximum distance. Oh geez, I forgot. There we go, that's a lot better. We assume that this is wave 1 right here, this is wave 2, this is wave 3, and 4 somewhere's there, and 5. Now, assuming that fib extension, regardless of how the correction happens, because wave 3 happened already, and wave 1 happened already, and wave 4 kind of has a bottom right now that we see in place. Because of all these factors that we see right now, we can automatically assume a 786 to 1-to-1 extension ratio somewhere right in between here. So guys, I do see Lisk as a long-term target between 49.16 and 57.07. That's right, 49.16 to 57.07. That's what I see Lisk long-term. You guys got to remember that people have said everything about coins like IOTA. It's impossible. The market cap of IOTA, how could it possibly go from 30 cents all the way to like $5, $6, $7? EOS, that's impossible. 2 million supplies being added daily right now, okay? It's 50 cents right now. How could it possibly go up to about $20, okay? That would be a ridiculous gain. I just want to tell you guys that things have happened, like Litecoin going from $50, $60 to like 300, you know, like Bitcoin going from $700 last year early to you know, like $18,000-$19,000. Things can happen, okay? And I'm just seeing all this from a technical analysis perspective based on Elliott wave count and based on what I see, which reflects price action and market sentiment in the charts and in the candles and in the patterns. Okay, so I have explained literally every single possible scenario that can happen in here, including the potential patterns that can happen so far based on what I see, which is a very limited amount of data, although based on extrapolation and going from waves 1, 2, 3, and 4, I can easily extrapolate a possible target 5 hit somewhere up there in the future. I don't know how long, guys. I'm going to expect a long consolidation, okay? I'm expecting a long consolidation period. Maybe not that long, who knows? I'm talking about months, guys, okay? Like, I'm talking about, you know, like in summertime or even in the fall. But this is a long-term hold, guys. It's a long-term hold. We're just going to wait for another slight bottom, wherever it is, whether this channel holds or not. But assuming worst case, even if it hits 20, right, we're talking about a minimum of 130% gain, 130% gain in the future, right? And the worst case scenario, if this channel does hold, all right, and this Fibonacci level is right there, and you even entered at say $30, right, after we've confirmed the channel holds, that's still an 89% gain there, right? I'm not talking about any stop losses right now, but I'm just seeing based on the charts and based on how I rationalized it to you guys that I know Lisk because they've been around for a while, right? Like since June, like 2016. But apparently things are kicking off right now, and there's obvious reasons why, well, not obvious reasons, but it is obvious that the charts are moving and something is catalyzing the process, something is speeding up the process to make it move like this right now, right? So so yeah, I see all this right now. Okay, actually, yeah, like, I don't know, I see a big correction overdue right now. Honestly, like, if it counts for anything, I don't see this channel holding. I really don't see this channel holding in here, and I see it correcting. I see it correcting. Let's just say we did something like this. I see it correcting more, right? And I don't see it holding like that. I don't see it coming down this much either. Like, that's kind of extreme, but it is possible, guys. Like, it is 100% possible that it ends up making a massive channel, and then we end up even hitting these particular reasons, like these particular zones right there. So as much as I'd like to label in here up to 100% profit, I'm going to explain to you guys right now that we're in consolidation mode for Lisk, okay? We're snapped too far, too high right now. On the weekly right now, we're very bullish still on the weekly, right? But we're getting a lower low than even in the weeks in April there. 4 hours is just not reaching any insane RSI anymore. And we've talked about all that already here. So I do think it's gonna not hold. It's gonna make a B, and it's probably gonna make, this one's probably gonna make maybe a zigzag or so. It might even come down to possibly the $20 ranges again. But right now, I've got my eye on under $28, and I want to see what kind of pattern it rides up to be right now. So the title is for this video is going to be, Lisk in consolidation mode right now. Ready to consolidate. That's going to pretty much be the title. So yeah, I'm ready to consolidate, but long term, those are my targets that I see it possibly hitting, like really far down the road. So other than that, guys, I hope you enjoyed the video. Those are my 2 cents. I posted a blog version of this on Steemit as well, which I would appreciate a quick look at it if you would like, if you have time, and also an upvote. Please like, subscribe, share to my YouTube and videos, and Twitter as well. And if you guys especially love the video, you are welcome to donate to my dog's cryptocurrency piggy bank that's used for lots of tequila and vodka. She's got a little bit of a problem, but who doesn't, guys? Who doesn't have a little bit of a problem if you're a dog, She's going through about an ounce a day right now. You guys heard me announce. That's about a shot. That's 28.6 milliliters. Yeah, she's trying to really up her. It's getting kind of sad. I can't even talk about her problems right now. Anyways, guys, have a great day. So Lisk is in consolidation. Don't forget that. Bye now.